Welcome back. Mihir Vora from Trust Mutual Fund is now joining in to navigate the market volatility, the headlines, and what investors should be doing with their money in such a situation where tensions are running high between India and Pakistan. Mihir, thank you very much for joining in. So, long-term history tells us that generally, even when tensions are high, it's not that there is a material damage to the markets. We generally tend to move on. But in the near term, as we navigate the here and now, what's the advice that you're giving to clients now? I think you're on mute. Yeah, go ahead.
Yes, hi. Can you hear me?
Can hear you loud and clear.
Okay, great. So obviously markets will remain volatile around such events, but to some extent, since it's been a couple of weeks since the terrorist incident happened, the markets have been expecting some action. Last time, I think in 2019, there was a couple of months of gap between the event and the action. This time around, it has happened much faster, I guess. So to that extent, partly such action was expected. The timing, of course, was not known. So, I mean, once you're past the actual event, probably the market start looking a bit more forward. Now I think the ball is in the enemy country's hand to basically take a call on how much they want to escalate the situation, because I think India has done what it needed to do, and probably there might be some more going forward. But more or less, I think the big event is past us. The markets have been actually kind of discounting this, and in spite of knowing this, impending action to some extent, the markets have been quite stable. What has happened, I think, is over the last 20 years, we've gone through a learning curve. And the big picture is that even though such events happen, they have not really escalated into a wider conflict. So that's the learning over the last 20 years. And second is that the Indian economy itself has grown so large that even if there is some skirmish, the economic implications in the long term are not that significant. So I think these two learnings are very significant over the last 20 years. And the third portion is, of course, the fact that both FII flows and domestic flows are quite robust in the last few weeks. Domestic flows have been robust for the past few years, which was not the case 10 or 20 years ago. So I think the bottom line is that the Indian investors have gone through this learning phase. Domestic flows are strong, and basically, unless this thing escalates into a wider conflict, the markets are able to absorb such shocks.
Mihir, good morning. Thank you for joining in. The other big factor that has been the determinant of the market moves have been earnings. And there was a lot of fear that the fourth quarter earnings may also turn out to be as bad as the third quarter was. But that has not been the case, at least for majority of the companies that have reported so far. Do you see this improving further as we go into FY26? Because then the low base kicks in as well, and that acts as an additional kicker to move the market higher.
Yes, that's been our base case in any case. But so far, the earnings season has been a mixed bag. I wouldn't be very euphoric about it so far. At least the large caps have not done too much in terms of earnings surprises, but they haven't been major disappointments too. So I would say it's been a mixed bag with single-digit kind of earnings growth expected for the March quarter that just went by. Going forward, as you rightly mentioned, there is a low base, especially in the June and the September quarters. The base is far lower because we saw that the government spending in the quarter of June 24 and September 24 really was low, and there was a big break, I would say. So that base should help us going forward, and that's been our base case going forward. Large cap earnings growth expectations are still probably high single digits. Small cap earnings growth expectations are a little better at about 15%, and I think so far that assumption still holds.
So Mihir, are you all fully invested at Trust Mutual Fund?
Normally, we tend to be fully invested. We don't keep more than 5 to 10% cash, and that's the current situation also.
So incremental money that's coming your way, where are you deploying it? So tell us the actions, the portfolio changes that you all did in the month of April.
Broadly speaking, we haven't done too many changes in April. We had done some changes in Jan-Feb, essentially shifted a bit in favor of larger private sector banks and NBFCs, added a bit to some of the cyclicals again, which we have trimmed a bit. But apart from that, no major changes, I would say.
Two themes, Mihir, that I wanted to ask you about, where there is rising competition. We just saw a downgrade coming in for DMart earlier this morning over this rising competition. So how do you approach this retail / hyper local retail space? And you can combine that with the quick commerce players as well. And the other one is the wires and cables space, where after the foray from Ultratech, from Adani, the numbers that have been reported so far by the incumbents have been fairly resilient.
Sure. So on the quick commerce space, we have some exposure because we do think it's a growth segment. However, there has been disappointments in the last couple of quarters. The assumption was that we probably may not see as intense competition in the 10-minute delivery, 15-minute delivery space. But I think companies are not taking any chances and investing for the future, so to say, which is depressing margins to some extent. So it's kind of a mixed bag. We're not taking a big call either way. We have some holding. We are sticking with it. As far as the cable space is concerned, there is a concern of competition. But I think beyond the point, maybe valuations are catching up, though we don't have much exposure to this space. But the sector has been lackluster in terms of earnings growth for quite some time. And maybe the base effect is now catching up, I would say.
The Alco-Bev sector is in focus today on the back of the UK FTA. Is this a sector that you have interest in? Is it a part of your portfolio? Any stocks here?
Yes, we do have some mid-cap exposure in the Alco-Bev space. But that's more because of the fact that we do believe that premium consumption items will continue to grow well. And, spirits are, of course, to some extent discretionary. And we have seen the industry growing more because of premiumization, so which fits in well with our thesis of premium consumption. So we have some exposure there, yes.
Mihir, pleasure having you as always. Thank you so much for sparing time and joining us today on the show. Mihir Vora there of Trust Mutual Fund. Take a short break, continue with earnings conversations. Amit Agarwal, the Executive Director and Group CFO of DCM Shriram, joins us on the other side. Stay tuned.